time this morning to join myself and Mary to chat a bit about mortgages and real estate. So I will just send in the chat a bit of an agenda. So as you can see, so I'll be starting first. My name is Sam Thompson. I am a mortgage agent with Joe Bladdock's office. And we primarily work out of Barrie, but the beauty of being a mortgage agent is that we can do mortgages anywhere in Ontario, and we've worked with Mary quite a bit. And at 10, it'll be taken over by Mary, who will be chatting with you guys about the real estate process. And then you'll see at about 10:30 when both of our presentations are done. We're going to open it up to a Q&A. So definitely while we're presenting, if you have any questions, feel free to just write them into the chat. And then once we get to the question and answer period, we can cover off anything we've missed or any questions that you have there. So if that is good with everybody, I will start sharing my screen and begin my portion and chat with you guys a bit about mortgages today. How exciting. I can hear the cheers on the other side of the muted mics. Okay, cheers. Okay, where's she? Alrighty. So as I was saying, I will be chatting about the mortgage side of getting into your first home as a first-time home buyer. So I'll be covering off the mortgage broker process, what that means, what it's like working for using a broker versus a bank, or we'll talk about getting a mortgage, a lot of the mortgage mistakes that we see people come into our office with. We'll chat about a lot of ways to get you some money back when you buy through various grants and incentives. And then I will finish off just covering the first-time home buyer incentive. So just a little bit about myself. As I was saying, I work for Joe Bladdock's mortgage office. We work for Realtor Mega Mortgages, and we're licensed with all banks and lenders. And yeah, my role specifically in Joe's office is I work firsthand with almost every first-time home buyer who comes through the office with any questions they have and getting them all pre-approved. So before we even get started chatting about mortgages and grants, rebates, we just want to show you guys a bit of a case study here. So this was a couple named Jennifer and Joseph, and they had come to one of our seminars back when they were in person, probably last year sometime. So just take a look at some of their numbers and where they were at in the process to see if it looks a little familiar. So when they came in, they only had $1,400 in their bank. They didn't know what their credit score was, and their approximate household family income was $65,000. So that may look a lot similar to some of you guys coming to this webinar today. So what ended up happening was just months later, they were able to move into their home with biweekly mortgage payments of just under $500. So really, we like this testimonial just because it shows that regardless of where you are in the process of information or seriousness, I guess, of getting into your first home, we can take you from point A to point B, which is a first consult with either myself or Joe, right into owning your own home. So you're probably wondering from this testimonial where you start. So the first thing that we can advocate is that you start by getting pre-approved. It is very fast. It avoids any disappointment and speeds up the process. So it really, I think we're experiencing a little bit longer periods to hear back from the lenders due to COVID, but typically we can hear a response within 2 to 3 days if you've been pre-approved. In terms of knowing what to expect and saving you money, the worst thing that we can think about is that, you meet with Mary, you start looking at houses that are, listed price around $500,000. You find your dream home only to realize that you'll only qualify for $450,000. $50,000 is a lot of money to try and, wiggle around and make up. So we really want you guys to know what to expect with a pre-approval so that when you're chatting with Mary, you guys know fully what you're expecting and you can search for homes directly in your price range. It also does present a stronger offer, and the seller takes you more seriously because it's just shown to them that you've done your homework, you've reached out with a mortgage broker or an agent, and you've already gone through some of the qualifying process to get that pre-approval. And another thing, given that we're expecting rates have a potential to rise, it does guarantee your interest rate for the life of the pre-approval, so 90 to 120 days. Oops. Okay, so these are just some of the banks that we currently work with. Some of them you may realize, some of them you may bank with yourself. But this is really just to show that there is a very long and extensive list of things that are available to us. Yes, so a lot of these, some of them you might bank with, some you might not have heard of, but again, it gives us just a more varied approach when we're looking at your mortgage scenario for what lender will work best and what mortgage type will work best as well. So typically getting pre-approved just starts with actually an email. It used to be texts, and then we would have an in-person consult, but now due to COVID, a lot of the times it's just a phone appointment that you'll book through our office. Excuse me. All of our pre-approvals more or less happen over the phone, via text, email, or Zoom Skypes. Yeah, they're really, it's not limited to us meeting in person. We can talk about everything we need, over the phone or on Zoom, and then be sending documents to each other on email. And the only things we need to get you pre-approved is just a pay stub and a photo ID. And then once you're pre-approved, we can get, the other documents from you via email, or if you want to scan or fax it to us, you can do that as well. So why do Canadians use brokers? So this funny analogy or comparison is just to illustrate finding mortgages that fit. I mean, I'm a relatively tall person, and you guys don't know Joe Bladdock, the broker at my office, but he's a very tall guy. So we definitely understand the struggle of trying to find a t-shirt where sometimes it fits on the shoulders, but then it's way too wide on the waist, or it fits around the waist, but it's a crop top like the poor guy on the right here. So we really want to find you a mortgage that fits and really tailor a scenario and an experience that suits your needs. So again, we can provide that from giving you access to more products than just walking into whatever your current bank is. Protecting your credit score is a big one as well, because we only need to do one credit check, and that's valid across all of the lenders that we work with. So we don't need to do individual checks with each different lender that we're looking at submitting your file with. And we all know that buyers have a unique story. So what we actually get to do is we get to communicate directly with the underwriters at each of these lenders. And we get to sort of communicate your story. So just a quick testimonial of a deal that we had submitted for a pre-approval much earlier in the year. I think it was in February. The client had a little bit of poor credit a few years back, and it was showing up negative on his credit report. So what we were able to communicate to the underwriter is at that time he was just a temporary part-time employee, but since then he had secured full-time permanent status. And we actually found that within the next few days his pre-approval was accepted, and we were able to send him that confirmation letter. Again, using a broker is completely free. So we actually get paid by the bank. So nowhere in the process do you pay us any money, and it's actually in our best interest to get you funded in a home that's going to work for you. As again, I was chatting about mortgages that fit. These are just some examples of mortgages that are available to you. It can be a new build, a renovation mortgage, flip, short-term, portable. Really, we'll decide on our phone call or appointment with you which mortgage will fit your scenario best, and then we can go from there, pursuing the avenue that's going to get the best results. And if anyone out there loves coffee like myself, I have my coffee with me this morning. There was actually a study that was done that brokers save their clients on average an additional $42 per month compared to going into a a bank to get your mortgage. So we've worked it out that that's about a small Timmy's coffee every weekday of the month. It used to be every day of the month, but they've increased their prices. So if you love coffee and you want a mortgage, we are the perfect candidates to work with, because we will essentially buy you a small Timmy's coffee every weekday of the month. Okay, there we go. So now that we've established the difference between bankers and using a mortgage broker, we're going to look at some of the mistakes that people make, and a lot of them, they don't even know that they're making them. So the first mistake is going to be ignoring your credit score. You really don't want to start the whole process, be chatting with me and Mary, just to find out that when we're trying to submit your mortgage pre-approval or approval, that you don't meet the minimum requirements needed in a credit score to get approved. Or get stuck with the bad rate, say we have to use a B lender or something like that. We really don't want to do that, and we don't want you to get stuck. So it's really easy to check your credit score either at Equifax or TransUnion. Those ones you have to pay for. There is also, through a lot of mobile banking apps, you can check what your credit score is, or websites like Credit Karma. And those are really great because they just, let you take a bit of a pulse of where your credit's at, if it needs any improvements, and how to start repairing that credit and building it so that you're in a better position to get a mortgage. If you have gone through a consumer proposal or a bankruptcy, we really do strongly recommend that you have to follow the 222 rule. So what that rule is that the banks aren't going to lend you a mortgage unless you have 2 credit cards for 2 years with a $2,000 limit. So this is actually really important. We've seen even a few people try to, they go through the process, but they only have, say, 1 credit card for, a number of years since their consumer proposal or their discharge. But again, we do need you to have 2 credit cards. So if you haven't done that, that's going to be your first step, is following this really simple rule. Just taking a gander at the credit amounts, what's considered poor and what's considered amazing in our industry. So if you're looking and you find yours around, anywhere from 630 to 650 or higher, that's considered a good rate. There shouldn't be any issues with, getting you a mortgage. Anything below, closer to the 600 range, or anything below 600 is going to be poor credit. So again, if you reach out to our office, we can chat about some really simple ways to help build your credit. You may not be able to approve or get approved right away, but we can work on some future strategies so that you're in a position to purchase in the future. Just to give you guys a bit of an idea moving forward of what goes into a credit score calculation, because it is a pretty heavily weighed factor in getting a mortgage approval. The biggest portion of the chart you're going to see here is credit history. So that's just the length you've had the account. So one thing that we can recommend is that if you have, say, a credit card or a line of credit from high school or from college, university, we really want to recommend that you just keep that open, even if it's a low balance, because the minute you close that account to open a new one, you lose all of the credit history that's attached to that account. The second biggest one that we see calculated is the debt owed. So we really want to recommend that you keep your debt below 50% if possible of the total credit limit, sorry. So how we like to kind of illustrate this is it works to have $900 balance on a $1,000 credit card, or a $900 balance on a $10,000 credit card. You might think, oh, well, they're more or less the same because it's 900, but unfortunately the bank actually sees $900 on a $1,000 credit score as significantly worse, because you're using 90% of your available credit limit. So that's just a really handy trick to help you guys, start building your credit. If you can just keep it below 50%, and even just paying off your balance before the statement comes out at the end of the month can help improve your credit score as well. Not reviewing your options. So again, basically all of these will be sort of satisfied by working with us. There is a lot of different rates out there and lenders to choose to work with depending on what your mortgage needs are. There's lots of different ways to pay, say biweekly, monthly, and penalty calculations. So really, I think not reviewing your options is more just a mistake if you come in with sort of a one-track mind of this is what I've read on, ratehub.ca, this is what I want. We can really work with where you're at and find the scenario that's going to fit, your mortgage needs the best. So just looking at rate options, 2.84 versus 2.99%. Is there going to be a difference here? I mean, the first difference you'll notice is that rates are significantly lower than that now. It is an older slide for sure, but besides that, there is a massive difference. So just that small 0.15% can save you almost $10,000 over the life of your mortgage. So getting the best low rate that you can is definitely a really great option, and it's something that doesn't necessarily always translate that 0.15% can have this effect on your mortgage. Different banks. So again, I showed you guys all the slides with the lenders that we work with. Some are the banks, some are funded by the bigger banks, but are just smaller financial companies. So by running your scenario by each of them, it really can result in us getting you the best savings. And again, we do this all on one credit check. Taking a quick look at monthly versus biweekly payment options, which one do you guys think is going to be a faster or paying less on interest option? If you answered biweekly, you are completely correct. So this chart here just illustrates the difference between a traditional monthly versus a biweekly mortgage payment. So you can see they start about the same, but then the yellow chart of the biweekly payment, it tracks actually quite a bit faster repayment process, and you actually save how much you spend on interest. And that's just because it's biweekly, you're making 26 payments in the year as opposed to just a traditional 12 payments for your mortgage. So in essence, you spend less on interest and you pay off your mortgage faster. Penalty calculations have actually become a huge portion of concern and definitely something to be aware of. So we all know that sometimes life happens. The only option is going to be to break your mortgage, either by selling out of term. Any of those scenarios, say you go through a loss or a divorce and you need to sell your home, we really don't want to see you guys getting stuck with upwards of $20,000 in penalty calculations just for ending your mortgage early. So that's definitely something that you need to keep in mind, and that we keep in mind when we are setting up your mortgage for you, is looking at what that mortgage penalty is to make sure that it's a soft enough amount that in the worst case you do have to break your mortgage, you're not stuck with some of the crazy fees that we've seen from the big 5 banks listed on the screen here. Borrowing too much is also a mistake. A lot of people just come to us and they say, Sam or Joe, like, I just want the lowest rate. Give me the maximum that I can approve for. It doesn't matter how I get there. Just give me the max. We don't want you to borrow too much that you end up house poor. We've seen it before where, you buy everything and, you don't even have enough money to furnish or to pay for the movers to move all your stuff from your apartment to your new home. We want to make sure that you're borrowing within a limit that's not going to leave you guys mortgage payment to mortgage payment and not being able to live in the new house that you purchased. And on the topic of borrowing before you buy, especially even after getting pre-approved, and if you're planning on getting a car loan, make sure you get your full mortgage first if it's possible, because adding a car loan payment, even of $300 a month, $350 a month, it can actually drastically affect what your mortgage qualification amount is. So again, even if you've been pre-approved and you're looking to buy a home in, say the 3 months, and you buy a car in that window, it's still going to affect what your actual approval will be. And if you guys currently, any of you have a car on loan, don't stress, don't worry. We've worked with a lot of people who have car loans to, get them the maximum they can qualify for, even with the car on as their one of their liabilities. Forgetting about closing costs is also a big one. It tends to sneak up on people. They've paid the down payment. They're going through all this process. The last thing they're thinking about is having closing cost cash there and ready. So we really recommend that you save about 1.5% of the purchase price to cover the closing costs. So again, there's more information in, we have a closing cost worksheet that typically we would hand it out. It was in a lovely laminated booklet for you guys. But as we're doing this as a webinar, you're going to get emailed a copy of the closing cost worksheet, which will sort of break it down in more detail. But again, just moving forward, saving 1.5% of purchase price is a good benchmark to have for your closing costs. Mistake number 5 is really easy enough. It's just not getting pre-approved. It's a really quick conversation over the phone with myself or Joe. It's completely free, and we can send you your pre-approval after submission, within the same week for sure. Once you've been pre-approved, it's time to start setting up your home buying team. So again, using a mortgage broker, using a real estate buyer's agent, such as Mary here, and really just working with agents that are going to have, your best interest as their top priority. We really want to recommend, Mary will talk more about the real estate side, but we really want to recommend to not use a real estate seller's agent. Always work with a buyer's agent. They're going to have your best interest at heart moving forward. So we will really quickly brush over this. Actually, we might just skip for the sake of time and go into the first time home buyer grants, rebates, refunds. So get your notepads ready. There's a lot of numbers that we're going to be going through here, and it is definitely the best part. So getting started. So first time buyers are entitled to a refund of about $1,000 if you purchase an energy efficient home. So they can receive about a refund of about 10% of their CMHC insurance premiums if you purchase one. This is actually through Genworth. So typically it's a lot of new build homes that you get this refund because you just purchase it as an energy efficient home. So for example, if your purchase price was $425 and you only put 5% down, that refund works out to be about $1,100. Ontario and Toronto land transfer tax rebates. So if you are a first-time home buyer, you are entitled to a refund of approximately $4,000 to cover your land transfer tax if you're in Ontario. If you are in Toronto, there is also a Toronto land transfer tax rebate, so they do have an additional $3,700 refund available for you. I don't think anyone's planning on buying in Toronto, but if you are, this is just to show that that does exist. So there is a rebate if you are buying in Toronto of a total $7,725 that's available to you. So again, using the same example of $425 with 5% down, that refund works out to be about $7,000. New to Canada benefit. I've actually worked with quite a few first-time buyers who are also new to Canada. And there's a very cool incentive that is available where they have reduced the employment requirements to just 3 months. So typically we'll need 3 years work history. They've reduced that to 3 months, and there's no credit score required. So we'll just look at what your bank statements are, insurance statements, phone bills. The only real difference in applying for this is just letting me know in our phone conversation if you are new to Canada, if you're a permanent resident, what your land-in date is. And then the additional documentation we'll need is just your permanent residency card. If you are a first-time home buyer and are planning on buying a new build home or building a new home yourself, there is an HST rebate that's available to you. So for example here, if you are going to purchase a home that is worth $425,000, that rebate works out to be around $33,000. So again, that's just if you're buying a new build home from a builder or you're building a new home yourself. There is also a tax credit that's available to all first-time home buyers. So this is something that you're going to fill out on your income tax report for the following year after the purchase of your home. So in the specific line, I'm blanking on which line of your tax return it is, but you just write in the tax credit of $5,000. And for an example here, a family with a household income of $85,000 works out to be about $2,100 that you get back in the following tax year. Free 1-year home warranty. So again, this is available if you're a first-time home buyer through a selection of some of our lenders. So this warranty covers home heating, air conditioning, electrical, water, heater, and plumbing. So a lot of the bare bones necessities, and we know that if anything is going to happen, with your home, Murphy's Law, it's going to happen within the first year of being a homeowner. So it's a really great, home warranty that's available to you. It covers up to $10,000 in repairs, and there's no inspection that's required. So again, when you're reaching out to us on the phone, just bring this up to us and we can make sure that we get you submitted with a lender that does offer this. If you are looking to boost what your down payment amount is, you can actually withdraw money from your RRSP through the home buyers plan, completely tax-free. So they have this incentive that each home buyer can withdraw up to $35,000 or $70,000 per couple, completely tax-free. So it saves you an additional $21,000 just in tax because you're withdrawing it from the home buyer plan. And how this works is you take part in the home buyer plan, you withdraw that money from your RRSP, and then basically it just becomes a loan that you repay. But again, it is very helpful if you're looking to help boost your down payment amount. And I think I've actually worked with a number of clients who have gone this route just to help boost what their down payment amount is. So again, you just have to be a first-time home buyer, a person with a disability, or buying a home for someone with a disability, or if you've just not owned any properties in the last 4 full calendar years, you can qualify. So other ways to get a down payment if you don't already have one. So all of these municipalities listed have also a program that is available to you. They all sort of operate under different names, but it's basically a municipally funded down payment assistance program. So all of these ones listed here offer either 5 or 10% down payment added to your initial 5% down. And the benefit of going with one of these municipal grants is that they are completely forgivable. So typically the qualifications to get them is you have to be renting in the municipality for at least 1 to 2 years, I think. But when you qualify for it, it's forgivable after 20 years. So if you're looking at purchasing a forever home, or if that's incentive enough to live in the municipality for 20 years, the down payment assistance after 20 years is not repayable. You don't have to pay anything back. So again, if this is something that you're interested in, there is a bit of a wait list because it is municipally funded. You will be put on a wait list typically, and then once the funds become available, they will get in touch with you, and then you can go from there. Other ways of getting a down payment can be rent-to-own programs, gifted equity from seller, gifted money from family, and accessing line of credit. So if you're going to be getting any sort of personal loans, that is available. The only thing is that money has to be in your account for a total of 3 months before you can use it as a down payment amount. So say you borrowed a personal loan of $10,000, you would have to have that in, say, your checking or savings account for 3 months, so that when we show the lender 3-month history, it qualifies as a down payment. So in total, I don't expect you to remember all of the numbers that we just talked about, or all of the different incentives or rebates, but in total, the savings could add up to about $52,000. And actually, the most crazy part about this is that a lot of these first-time buyers aren't necessarily even aware that they exist. So again, that's the benefit of working with a mortgage specialist such as myself or Joe, is we know that they exist, and we can really help you navigate which rebates are for you and how to get you the most refunded cash when you apply for your full mortgage. So I will quickly go over what the first time buyer incentive is, and then we'll pass it over to Mary to talk about the real estate side. Okay, so the first time home buyer incentive, basically this is just a shared equity loan through the government of Canada, which will offer you 5% if you're purchasing a resale home, or either 5 or 10% if you're purchasing a new construction home. So let's just look at what the breakdown or sort of side-to-side difference is of using the incentive versus not. So as you can see, both columns, the buyer's income is the same, the home price is the same, and you do have to still have the minimum 5% down payment. But just the difference is here, the right column has an additional 5% through the first-time home buyer's incentive. So we'll see the effects as we move down, that the insured mortgage is lower. As a result, the mortgage insurance premium is lower and their monthly mortgage payment is lower. So it works out to be about $100 saved each month, and in yearly costs is almost $1,500. So again, that money is completely yours. Over the 25-year amortization of your mortgage, that can actually result in considerable savings. So that money is yours to invest in a hot tub, to do future repairs on the home, anything like that. All properties that are eligible are new construction, resale home, single family home, duplex, triplex, condo units. Basically, if Mary can find you the home, it's eligible under the first time home buyers incentive. So who can apply? So there is some qualifications before you can take part in this program. And your maximum qualifying household income can't exceed $120,000. You both have to be Canadian citizens or permanent residents, or if you're legally authorized to work in Canada, you do have to be a first-time home buyer, at least one of you. The only other thing is that the loan amount is maxed at 4 times your household income. So say you earned $100,000 as a family home, your loan amount would not be able to exceed $400,000. So that's just a regulation in place so that there is a cap on how much you can purchase. Alrighty, so that is the end of my portion of the presentation. I hope it was educational and that nobody is sleeping. It's energized you this morning. And as a thank you, we really want to give you guys a chance to win your down payment. So you would have seen when I in the chat box that as well as our agenda for the day, there's also a link to sign up for a scratch card. So if you just click that link, it's really easy and fast to just add your address and your name, and we will email you, or sorry, physically mail you a thank you card as well as a scratch card with prizes up to $10,000. We would love to hear back that you came to our webinar, learned all this great stuff about mortgages, and then on top of that, won your down payment in one of our scratch cards. So yeah, it's a really quick process. I can send it again in the chat, but feel free to click that link and get your scratch card sent to you. So again, big takeaway is reach out to us to get pre-approved. Call or text either of the numbers on the screen. You can visit us at mortgageweb.ca/barrymortgagebroker or facebook.ca/bmortgagefree. So thank you guys so much. And Mary, it is all yours.
Awesome. That was great information. Just give me a second here. I want to get myself set up. Okay. Okay, here we go. So my name is Mary Ralston. I'm with RE/MAX Twin City in Waterloo. I'll give you a little bit of background about myself. I've been in real estate just over 9 years. I lived in Barrie for a long time and then moved back to the Waterloo area, basically to be with my dad. He's 94 years old and needs some help. So I grew up in this area and it's nice to be back. It's a great city to live. And I love helping people find houses. That's my passion. So I'm hoping that one day I can help all of you find a house to live in. So just some tips to give you when you're thinking of buying. Basically, what I'm going to do today is take you through what it's like to buy a house from my side and what I do to help you and relieve the stress that can go along with that. So some tips that you need to know before you buy. You need to work with a lender for pre-approval like Joe and Sam. It's really, really important, especially in the type of market that we're in right now, that you get a pre-approval done. Because if you don't have a pre-approval And so let's say we go out looking at houses, you haven't been pre-approved, you find a house that you like. Pretty much every house that we're going to look at is going to have a lot of different offers on it. And if you don't have your pre-approval, then we're not going to win that offer for you, and you're going to lose out on a house that you love. So it's really, really important to get that done. So things that you need to think about as well as your pre-approval, there's going to be some costs for buying. So you need to have a down payment, which, you know, Joe and Sam can help you out with through their pre-approval process. You should get a home inspection, but because the market is so competitive right now, there are things that I can do to help you with that, because very often when we're putting an offer in, it needs to be what we call very clean. So, you know, very limited conditions. So sometimes what we can do is we can do a pre-inspection when we're doing one of our showings. So you don't have to have that condition in your offer. And you need to keep in mind that you need to have a purchase budget. So Sam kind of covered that in the things that he was talking about. So there's your deposit. You're going to have legal fees because you have to have a lawyer that can help you with closing. And there are costs for the lawyer to help you do that. The land transfer tax as a first-time home buyer, that's usually done as a rebate. And hopefully the lawyer that we work with doesn't make you pay it up front. And those are just different things that we help you with as well. And as Sam mentioned before, I said, never deal with the listing agent. A lot of people think that when you're dealing with the listing agent, you're going to get a better deal on the house. Well, that's just not the case, because their contract has already been signed by the person who's selling the house. So they already have an agreement in place. And they're also looking after the best interests of their client. Whereas if you work with what we call a buying agent, so that's someone who is representing you, then I'm looking after your best interests instead of, you know, the other person looking after their seller's best interests. So those are just some tips to keep in mind when you're buying. So the pre-approval process. So what I always do is I set you up with a mortgage broker like Joe and Sam to talk to before we're going out to look at houses, because I need to know how much you can afford to buy. So I don't want to take you out looking at houses that are 500,000 or 600,000 when you can only afford 4. And because that's really, really important. It's that it just adds to frustration. So once you get pre-approved, then Joe and Sam and I, we keep in touch, and they let me know, you know, what happened with your pre-approval. And then I do a follow-up phone call to you, and we get things rolling with starting to look at a house, which is very exciting. So we'll meet face-to-face. We can meet face-to-face right now if you're comfortable with that. If you're not comfortable with it, then, you know, we can meet by Zoom, or we can just talk on the phone. There's a lot of stuff going on with COVID right now, so it really depends on what your comfort level is. And I'll get into, you know, different ways that we can look at houses with your comfort level as well. So we're going to talk about, you know, what you want, and I'm going to ask you for your wish list, and I'm going to help you find as much as I can on that wish list. So once the pre-approval is done and we've talked about, you know, what you want in the house that you're looking for, I'm going to set you up on a home search. So the home search basically involves your criteria that you've given me, and I follow that criteria within the search that I set up for you. So you're going to get daily emails of different houses that come up, and they will be houses that come up before they go on realtor.ca. So you're going to get the first look at what's coming up before everyone else can see it. There's a lot of different ways that you can do searches on your own, but it's always best to work with a realtor, because we see everything before it hits MLS. So once we set the search up, then, we're going to keep in touch regularly, and I'll go through, how the search works and how you can flag houses that you like, houses that you don't like, because that helps me find the house that you want. So we'll keep in touch, and I'll keep you up to date on, what's going on with other houses that sell, and they do sell very fast right now. I'm not going to lie to you about that. I'm going to give you the best advice possible to get the best house that I can for you for the best price. And sometimes that's a little tricky, but I have different things that I can do to help with that. So showing houses, there are no open houses right now because of COVID. So you can't go out and look at a house on your own anymore. You have to go through a realtor with that. So basically, COVID from the realtor side, we want to make sure everyone is safe. We want to make sure the people selling the house, that they're safe. And I want to make sure that you're safe as well, and that you're comfortable going out to look at houses. So the different ways that we can look at houses, if you're not comfortable with going out in the public, we can do video tours. It's not quite as effective as going out to look at an actual house, because you don't always get the feel for the house that you want to buy. But what I also do, if you're not comfortable going in and we do a video tour, I can go in and I can look at the house, because I'll see a lot of different things that you need to keep in mind. So, things like the furnace, I'll check to make sure the furnace is okay. I'll check to make sure the roof is okay. I'll check to see if, there's anything on a rental, like a water heater or sometimes a furnace. And then I'll check, the walls and the structure and the outside. So there's a lot of things I can check for you. So if you're comfortable going into a house, then, we check those things together, and we have to set up an appointment with the person who's selling the house for a convenient time that works for both of us. The showings are limited to a half hour now, whereas before we used to be able to do up to an hour for a showing. You also will have to do a pre-screening questionnaire with me. So we do that ahead of time. And it's pretty simple. It's all the basic questions that you're being asked when you go into a store. And it's just to make sure that everyone's healthy and safe. And we also have to have permission from the listing realtor and the homeowner for viewing and follow, the protocol that they have in place. So, it's just all the standard COVID stuff that we're going through right now. So what I do, so me helping you as your buying agent. So let's say that we found that house that you like and you want to put an offer in on it. So what I'm going to do is I'm going to walk you through the best possible offer to get that house. So right now, like I said before, everything is very competitive. So chances are the house that you're going to look at that you want, there's probably anywhere from 5 to 15 people that want the house as well. So that's where I come in, and I help you get that house, because I know how to get offers accepted. And so basically the way an offer works is we put conditions in the offer that right now are very limited. So that's why your pre-approval is really important, because if you have a financing condition in there where, your offer is conditional for a certain amount of time to make sure you get your financing, it's probably not going to work. So the pre-approval needs to be done before we do an offer. Because when you're in a situation where you have 5 other people who are putting offers in, and so let's say you condition on yours that they don't, then the sellers are probably going to take the other offer instead of yours. So I know it sounds a little stressful, but there are things that between Sam and Joe and I that we're going to help you with to take that stress away. So the fun part is going out to look at the house and find the house that you want. And then my part is making sure that you get that house. So when we're talking about the house that you want to buy, I'm going to go through different things that I might see that you might not think about, within the house, to make sure that you're aware of everything that you're buying. And I want to do the best job possible for you to make sure that you get what you want. So after we do an offer, so let's say we found a house, we did an offer, your offer got accepted, then there are things that we do after that as well. So I'm not just going to disappear. I'm going to help you all the way through right till the end. And I stay in touch with you after as well. So after your offer is accepted, you're going to need a lawyer. So I have a list of contacts that I provide you. So if you don't know a lawyer, then I can help you find a lawyer, because you do need a lawyer for closing. If when we were looking at the house and you wanted to do what we call a pre-inspection, so we don't have to have the home inspection condition in your offer, because that helps to get it accepted, then I will help you find a qualified home inspector just to go through the things that they can go through in one of our showings. I'm also going to help you with any other contacts that you need. So like, let's say you need some home repairs done. I have contacts for that. If you need someone who, if you have to do windows in the house, if you want to replace windows, anything to do with yours, I'm going to give you a contact for that. So once everything is settled, so you have a lawyer, you have all your contacts for everything you need to do for your house, then the final step before the house closes, which is, the day before the house is yours, we do what we call a final walkthrough. So some realtors don't do this, but it's really important to do, because first of all, we want to make sure that the people moved out of their house so you can move in. And it's kind of important. And because if they didn't move out, then you can't really move in, and that affects your closing. And we also want to make sure that if there was anything within the offer that we wanted the sellers to fix, we want to make sure that that was done as well. Because I have had that situation come up where we've had a surprise where something wasn't done. So then that's where I come in and I help to make sure it gets done before the house closes. So after you move into your house, like I said, I'm not just going to disappear. I'm going to keep in touch with you. And I'm going to add you onto my client appreciation program. All of my clients are on this. They get monthly newsletters from me. And there's just different things that I send out every month. Just, things to do, maybe renovating, painting. I've sent out credit tips, that helps with keeping everything in line for you, and just different information that it's good things for you to know. So, and anytime along the way, if you need a referral for someone, like if you need something done in your house, then don't be afraid to call me, because a lot of my clients that I keep in touch with, they call me for things. If they had a furnace breakdown, then I'll give you a contact for that. And I like to help you and make sure that you're where you are. And I think it's good to keep in touch after as well, because we spent time together, and we're going to become friends, looking for this house. So, why not keep in touch? So, and then also, if you know anyone who is thinking of buying a house and you like the service that I provide, then you can refer those people to me as well. So like Sam, I also have a giveaway because I want you to be a winner. So I'm going to do this a little different than what I have in here. Is I used to ask people to go on my Facebook and like my Facebook and email me and whatnot. So I'm going to do this a little different, and I'll put this in the chat as well. So what I'd like you to do, if you want to win a gift card from me, I'd like you to text me. So my phone number is 226-218-6574. So I'll put that in the chat as well, just so you have it. So what I want you to do is text me your name and let me know when you want to buy a house and where you want to live. And then I'll get in touch with you and then I'll send you a gift card. So it could be something fun. So other than that, if you have any questions, put them in the chat, or if you can turn your video on or unmute yourself, then we're going to open up the chat for any questions. And I hope that you found everything helpful. It's really exciting buying your first house, and we're both here to help.
That's awesome.
That's all
Thank
I
you,
got.
Mary. Everybody better be texting Mary. You want a gift card? That's
You
a
better.
good offer. Yeah. So again, as Mary was saying, please feel free to, if you had any questions for either segment, yeah, you can either unmute yourselves now, or go ahead and type it in the chat if you would rather, you know, go that way. Seeing a couple questions here from Stephanie, so thank you for that. The question and answer period is really where you get the most out of it because you're bringing questions that you have. I mean, Mary and I cover a very broad stroked scenario of this is what your mortgage is like, this is what the real estate home shopping side is. But if you bring your questions, it really draws out of us, you know, the answers of things that you're, you know, directly looking for. So it's a very important portion of the segment. So Stephanie's questions here. So when you get pre-approved, when you get a pre-approved mortgage amount, does that impact your credit? So typically our pre-approval process, pre-approval, is that tongue twister? Typically that starts with just a pre-qualification. So in that stage, we're not actually pulling credit. It's not a guaranteed, this is your pre-approval letter, but it helps us take a look at your income as well as your assets and debts to give you an overall idea of you will qualify for $350,000, say. So if you do proceed with the pre-approval, we do have to pull credit. So it will count as a hard hit. I think it's only about 5 or so points for a credit inquiry from our office. And again, that will restabilize, you know, over time. So again, we save pulling credit until you're actually like ready to go with the pre-approval, you're serious into home shopping. So we can start everything as just a pre-qualified amount, get all your documents in, and then pull credit at the end. And you also had a follow-up question of how long it's valid for. It's valid for 120 days, so about 4 months. Again, the big advantage of doing that is your pre-approval letter as well as certificate comes with a rate guarantee of, you know, I think a lot of them are being processed now at like a lot of pre-approvals are coming in at 1.94. So again, in that 4 month span, if the you know, credit, their lowest credit goes down, you get the lower amount, but if it rises above 1.94, your rate is locked in and secured at 1.94. It's a great question. Thank you for asking that. Checking our Facebook or YouTube to see if we have any questions. Okay, so it looks like we don't have any more questions. Let's check one more. No questions.
Oh, give me a minute. I think we have one coming
Okay,
from
perfect.
Amy.
This is a great time while we're waiting for Jamie to text Mary or to click my jot form link there to enter your chance to be a winner today. And
Everybody
Jamie,
wants to be a winner.
that's right. And Jamie, if it is easier, you feel free to unmute yourself, and if a conversation is easier for you. We love to talk. It's been a funny experience in COVID. It feels strange to be face to face and talking with other people.
Hello, can you hear me now?
Yep.
Okay. Hi. So I have a question regarding the home buyers plan. So you have money in your RRSP, and in order to take it out, I know there's a sequence. But could you go in detail what the sequence is? And
Yes.
because you have once you put your offer, okay. So there is penalties if you don't buy the house. What goes in what entails that process?
Yeah, so through the home buyers plan, I think there's a website that you go to, and you start the withdrawal once you already have once you have put an offer, like a live offer, in on a home. So either after you're pre-approved with our office, or if you just go straight to Mary, obviously we'll recommend you get pre-approved first. But once you do, and it must be occupied as a primary resident. We do see a lot of these incentives. People are wondering, can I get the first time buyer incentive or use the home buyers plan to purchase a rental? Unfortunately, a lot of them, they do need to be your primary residency for at least a year. So that's, again, something to keep in mind. But again, so sorry, I got sidetracked. Yes, so you will apply for it once you actually have submitted an offer, and they will release the funds to your account. So then it basically comes out similarly to like a personal loan. So once you have the funds in your account, they can be used towards the down payment. So we'll send that information into the lender. They'll want to see your like sort of banking accounts, 90-day statement, so that they know those funds are there. And then that actually begins repayment from the start date of the mortgage. So once closing happens, you'll have the 5-year term to pay back the mortgage amount. So it'll come out in payments. You can repay the full amount if that's possible. There's no sort of prepayment penalty. But I believe that is what you were asking. So again, when you want to do it, we'll send you, the form is called a T1036. So it's a request to draw funds. And then in that section, we can email you the site. It's through the government. And you fill out, the qualifications of what amount you're needing, and some of your personal information, and then it will release those funds to you. Again, you do have to be to have sort of a live offer to complete this process. But yeah, we actually just had a client, I think this past month, that's used the home buyer plan to qualify and get a down payment for their home.
I bought my first house in my RRSP. It's pretty simple.
Mm-hmm.
Okay. Another thing. So I do not see. I see your phone number, Mary, but I don't see your link, Sam.
Okay, I can resend it here.
Okay, thank you. Now I do see it. I'll be back with one more question.
Sure.
We need a music time filler.
That's what I was just thinking. Some good elevator music to.
And if anyone else has any questions, just either put them in the chat or unmute yourself.
Mhm.
Ask whatever you want. We're here.
Okay, Jamie's saying he thinks they're good for now.
Okay.
So if there is no more questions, then yes, please. Oh, I have a question here from Stephanie. So would OSAP loans impact your pre-approval? Yes. So any sort of loan that's currently in repayment or credit accounts that are in repayment, they will come up on your liabilities sort of section of your application. So it will affect it. OSAP loans, because the timeline's relatively forgivable and the interest rate isn't too high, we find it doesn't have a dramatic effect on your qualification, but because it is a loan in repayment, it definitely is a factor. And I have even been asked, especially because of COVID, OSAP's done a lot of stuff for deferring payments or giving you a time. Unfortunately, we still do have to count your OSAP loan and what regular payments would look like when we submit your file, just because the banks need to know that, once the deferment period is over, does the mortgage still work with those payments coming out every month? But yeah, that's a really good question. OSAP loans, I think we get asked quite a bit about how your OSAP loan, just because it functions a little bit differently than getting like an unsecured line of credit or a personal loan. So it's a good question.
I'm gonna add one thing in, because a lot of the time I get asked the question, should I wait until housing prices drop?
Mm.
The experts in this area say that housing prices are not going to drop. No one has a crystal ball, but just to put it into perspective for you, someone put out an article just when COVID hit that housing prices were going to drop, and the opposite happened. Housing prices went up 20% in Kitchener-Waterloo. So, pardon me. So just to kind of give you an idea, so a year ago, I sold my house for $420,000. That same house today sold for $520,000. So there was a big jump. Now that was in Barrie, but the same thing is happening in Kitchener-Waterloo. So if you hear from people that, oh, you should wait to buy, wait till the market crashes, chances are it's not going to crash. And the longer you wait, the more prices are going to go up, because the experts are saying that in the next year, they're probably not going to go up 20%, but it'll go up anywhere from 7 to 15%. So there's going to be another jump coming next year. So if you can buy now, because you don't want to be caught where, you get a pre-approval today and then you think that you should wait until prices either stabilize. It's probably not going to happen. So that's just a little tip for you.
Yeah, it's really good. I think there's been almost every webinar, somebody has asked that question of,
it's a popular
do we wait
question.
for the market? What do we do?
Mm-hmm. Yeah.
Alrighty, so if there's no more questions, we will let you guys go. Enjoy your Saturdays, and thank you guys so much for coming up this morning and carving some time to spend with Mary and myself to discuss your first home. I'm just getting one question here. Jamie again. So should we wait to have a bigger down payment? So you need a minimum 5% is going to be the lowest amount that you can apply for. But we do find there is a correlation if, say, your income isn't really high enough to support the purchase price that you're looking for. Increasing your down payment can affect it. Again, it's not as drastic. Like, say you had a car loan. If you were to repay that car loan completely off, that would help you qualify for more. But again, having a bigger down payment definitely helps, and it saves you in the insurance premiums that you pay, because anything below 20% is going to require CMHC insurance on it. So increasing your down payment will lower that. It will also help you qualify for a little bit more if you're finding that your income is kind of capping you at a limit. But it's a really good question. Alrighty, yeah. So again, thank you everybody. If you haven't yet, text Mary right now, or if you haven't yet, fill out my link. One more question: is it worth it to have 20% down? Again, it's fully dependent on what your what your like financial scenario is, how you sort of want the flow of income. Because again, having 20% means it doesn't have to be insured, and 20% will definitely help. It should help boost what you qualify for. But again, you have to pay that right out of pocket. So it's dependent on how comfortable you are right now financially. If you still want to keep some like liquid assets in your account, or if you want to spend it on the down payment. It's really a varied process. And definitely feel free, Jamie, to reach out with me, and we can just have a really quick like a 20-30 minute phone call just with any of these questions, and we can look at what you pre-qualify for and your timeline from there. Okay. Yes, so that concludes the meeting. Thank you, Mary, for joining us today.
Oh, no problem. Thanks everyone for coming on a Saturday.
That's right. Alrighty, well, hope everyone has a great weekend, and we will most likely be in touch. Okay.
We will.
Bye, everybody.